For a little while there, it really felt like the whole fintech story was kind of settling down. It was starting to feel, well, a little predictable. But just when we thought we knew the plot, the entire industry got this massive jolt of energy. And that's exactly what we're going to break down today.
I mean, that first big wave of disruption was maturing, right? The initial land grab felt like it was over, and it seemed like the winners were just taking their victory lap. You could almost be forgiven for thinking, okay, the big race has already been run. But you would be very, very wrong.
Because just in the last few weeks, 3 very different companies made 3 incredibly different and incredibly powerful moves. And when you look at them all together, they don't just tell their own little stories, they signal that a major shift is happening. This is the Great Acceleration. Okay, let's dive right in with our first case study. This one is fascinating. It features a 159-year-old banking giant making a move so modern, it's turning heads absolutely everywhere.
So, meet the new power couple of finance. HSBC, the global banking institution, is teaming up with Mistral AI, a super fast-moving AI startup from Paris. But here's the really clever part. This is not just some simple cloud subscription. No, HSBC is bringing Mistral's powerful AI models directly inside its own walls, into its own infrastructure. Why? Well, it keeps the regulators happy, and more importantly, it keeps all that sensitive customer data locked down tight, far away from the wild west of public AI.
And just look at the sheer scale of this. This isn't about tweaking a few dashboards here and there. We're talking about supercharging everything from how they handle lending to how they do compliance. HSBC's top brass envisions a future where literally every single employee uses AI every single day. That's not a pilot program, folks. That is a fundamental core strategy shift. And this is just the perfect metaphor for what's happening. For years, the big advantage for fintech startups was their speed. They could outmaneuver the old legacy giants. But what happens when a bank like HSBC gives itself a V12 turbo AI engine? Well, it completely resets the competitive landscape. It lets them do things like hyper-personalization at a scale that was just impossible for them before. The game has totally changed. All right. Let's shift gears. Our next story takes us away from global banking and into a completely different kind of strategic play. This one is all about a massive and often overlooked market. $420 million. That's the number that got everyone's attention. And it's what PROG Holdings, a fintech out of Utah, just paid to buy a company called Purchasing Power. So the big question is, what exactly did they buy for nearly $500 million? They bought this, payroll-deduction financing. And it's a beautifully simple model. Basically, employees can buy things they need, and the payments are automatically taken right out of their paychecks. Now, for a company like PROG, which focuses on consumers with less than perfect credit, this is an absolute game changer. It drastically lowers the risk of anyone missing a payment. And this slide really shows you the master plan in action. You could almost call it a financial Voltron for the underbanked. They already had lease to own. They had buy now, pay later. And now, with Purchasing Power, they've added a direct pipeline into people's paychecks. This creates an incredibly powerful and really hard to copy ecosystem. It makes it really tough for their customers to switch to anyone else. And for our final story, we've got a true redemption arc. This is about a very famous fintech that spent years and years hearing the exact same criticism. Sure, it's popular, but is it actually profitable? That fintech, of course, is Chime. For years, they built this huge, loyal user base, but Wall Street was always a little skeptical. But just look at this timeline. Quietly, behind the scenes, Chime has been seriously sharpening its operations. And the result? A massive 29% year-over-year revenue jump and, maybe most importantly, a clear path to actual by-the-books profitability by 2026. And if you want the receipts, well, here they are. Goldman Sachs, one of the biggest names on Wall Street, just upgraded the stock to a buy and jacked up their price target by a whopping 28%. This is that moment where the story officially changes from, oh, that's a cute neobank, to this is a durable, serious financial player. So here's the thing to remember. Chime has always had an incredibly strong brand. People love them. Now, the business model, the actual numbers, are finally catching up to all that brand power. And when you get those two things to line up perfectly, you've got a seriously dangerous competitor on your hands. Okay, so we've got 3 different companies, 3 totally different strategies. So let's pull back and tie this all together. What's the one clear picture this paints about where the world of finance is headed?
So let's recap real quick. You've got HSBC, the legacy giant, integrating a new AI brain to get way faster and smarter. You've got PROG Holdings building a nearly unbreakable ecosystem for the underbanked. And you have Chime, the neobank darling, finally proving its business model is just as strong as its brand.
See, these aren't just isolated incidents. They're signals. They're telling us that after a little bit of a cool-down period, the pace of innovation and competition in finance is picking up serious speed again. The leaders are making really bold moves to redefine what's even possible.
And that really brings us to the final critical thought here. These companies are getting faster, they're getting more efficient, and they're getting way more competitive. So the real question isn't whether they'll be faster, it's whether everyone else can possibly keep up. Thanks for watching.